This is a shout out to all private equity groups, investment firms, and even family offices that end up every single year struggling because they've considered a lot of different opportunities but closed on none. And then they are ending up in October, November, having to allocate capital quickly without having the transactions that they need under their belt and having to compromise on deals so that they can ultimately allocate the resources that they have. In this video, I want to break down why that cycle happens, how you can fix it quickly, and how you can get more deal flow faster. And again, for those of you who don't know me, my name is Marco Palmero. My company Ulysses is focused entirely on deal origination. So we source transactions on behalf of institutional buyers, investors, and private equity firms just like yourself. And I want to tell you a story, kind of like a discussion I had with one private equity group at the end of last year, the end of 2025. This company came to us. It was early in November, actually, and they came to us because they wanted more deal flow. And the issue they were facing was actually quite common. They basically spent their entire year evaluating investments, and they had quite a decent pipeline of opportunities, to be fair. But none of them appeared to be the right fit for their thesis and their investment criteria. So they continuously passed on opportunities, and they waited for the better deal or the perfect deal, if we want to say so, although there's no such thing as a perfect deal. And what happened is was basically that they ended up in the last quarter of the year without enough deals in their pipeline and without enough transactions closed. And they had to allocate capital quickly to make sure they could show returns, they could show activity, and all these good things. So they came to us saying, well, Marco, can you find us deals, and please find us deals that we can close on before the end of the year. And that was kind of like a funny interaction to have, because this firm was like fairly sizable and they were quite experienced investors, but they still failed to understand a key concept of deal origination, which we're going to talk about in this video. And by the way, I have my little coffee here, Italian coffee to be frank. And by the way, this is a pure Italian coffee, no sugar, no nothing. If you have your coffee with sugar, in my opinion, you don't like coffee, you like sugar. But aside from that, let's get back on track. This company was basically struggling with deal flow, and the issue they had was, well, first of all, their pipeline was running dry, and that was caused by the fact that they were getting all their transactions through references, referrals, or through the investment banking network that they created over time. They were targeting deals of a fairly small size. We're talking 10 to 25 million in enterprise value. And the issue again was that they relied on these resources, external resources, for the entire year. And as these resources failed to produce, they ended up in a very bad spot. Now, for us, from an analytical standpoint, it was very hard to initiate a search in November to find deals that they could close by December. And there are a couple of reasons for that. Well, first of all, because we focus on off-market deals, which means we originate transactions directly from business owners. We establish the relationship, nurture the relationship, so that you can then close these deals directly with them. So the fact that we originate off-market deals necessitates us to build a pipeline that can create that type of momentum. And that is not something that you can create in 30 days, to be totally transparent with you. Why is that? Well, simple. Because most likely you're going to reach out to a seller that has made the decision of exiting, but hasn't prepared everything that needs to be prepared in order to execute on a deal. Of course, if you are reviewing SIMs from investment bankers or from other intermediaries and you're evaluating these types of deals, you're going to have a completely different opportunity on the table because those have been pre-packaged and pre-analyzed for you, and you just need to review the sim and make sure your due diligence checks out, and then you're good to go. With off-market, it's a little bit different, and I'm sure you understand that better than I do. So you need to work with the seller a bit more. But of course, the upside can also be significantly higher. So the first issue was that we couldn't really find deals in 30 days for them. But I think the core challenge there was not really our approach towards deal sourcing, but was this investment firm's approach towards deal making. So they came to us too late, and they failed to realize that in order for them to get predictable results out of a process like that, they needed to accommodate, they needed to have more time at their disposal. And if they had just, come to us end of the summer, they would have gotten the results that they wanted. But the fact that they kept delaying and kept procrastinating until the need was very, very urgent and burning, made them, put them into a very tough spot, into a very difficult situation. And I think a lot of investment firms struggle with that issue because they always feel there's going to be a better deal that comes along. And certainly, I don't blame you. If you are an investment firm, you always want to maximize your returns, and that's just fair. You want to find a better deal, you want to buy it at a better price, and then I don't know if you roll up the companies or if you hold them for a certain period of time, you then want to maximize the returns of these assets, and that is just totally fair and totally understood. But you cannot then expect to fix a problem that you didn't address earlier in the year when push comes to shove. I guess there is a quote that I like a lot that was from a mentor of mine that kind of like relates to this industry. So I'm just going to quote it exactly as it is, and then I'm going to relate it to the industry. He used to say to me, Marco, if you want to finance something and you need to go to a bank, you start Romans in May for sex in September. And it was like, it was kind of like a vulgar way of saying things. But I think the approach, the strategy applies to deal making too, unless you're dealing with prepackaged transactions that have been signed up by investment bankers, that have been already kind of like put on the market. You're going to need to go through a few steps because you're going to start earlier in the funnel. And I guess, you might say, well, I don't want to do that type of effort. Well, then you might need to rely on external sources for all your deal flow. And then you're basically putting yourself in the hands of somebody else and you're relinquishing your future to them. And that, in my opinion, doesn't sound like a good way to approach business or investment, in this case, if we're talking about business acquisitions. But the point I'm getting at is not that I want to discredit on-market deals or intermediaries that do bring you transactions. What I'm trying to say is there are a ton of investment firms like the one that I just mentioned that do end up kind of like stumble across this issue at the end of the year. Like, we haven't closed on anything. Now we need to close and allocate capital to show returns and show activity, and we don't have any deal on our table. That is a big issue for a lot of folks, especially because it makes them compromise. So they might have passed on very good deals earlier in the year, but then as they end up at the end of the year without transactions, they might close on worse deals just because they need to allocate the capital. And that is very, very bad for them, right? And so how do we avoid that? Well, we create a system that not only works for your on-market transactions, so it enables you to leverage your network, leverage the investment banking relationships you got, but it also creates a proprietary pipeline that you own and control. And I'm going to record a separate video on that because I know there's a lot of skepticism around that part of the process, and a lot of people feel originating deals off market doesn't work, and the reason is not really that the system doesn't work, is that they're approaching it incorrectly, or they've been dealing with somebody that wasn't able to deliver the outcome that they were expecting. And so you need, especially if you want to avoid this issue happening in 2026, to have different pipelines that originate deals in that bring you opportunities. Now, one of the tricky parts there is that a lot of times folks focus too much on short-term outcomes, and that was what this investment firm, was doing. They were basically coming to us in November saying, "Find me a deal, and we will close it." Well, yeah, sure, we can do it off market, but it's going to take a little bit more time, especially with Thanksgiving in the U.S., holiday season, Black Friday, all these fancy shit. A lot of times business owners get distracted. There are a lot of other priorities that come to mind other than maybe thinking about a sale of the business. And that might not always be the case. But the point is, they're always challenging in starting a process that late in the year. If you had started it in September, that would have been good. But that kind of like creates complexity. And it ultimately puts you at a disadvantage. And so the point I'm getting at is when we originate off-market deals, and we've done it for investment bankers, strategic buyers, investment firms, you name it, really. Hospital deals, 15 to 75 million in size, manufacturing facilities, 2 to 5 million in EBITDA, you name it. There are tons of case studies. You can go check them out on our site. I think the approach that we want to take always is how do we build a pipeline that can predictably generate results for you over time, even if you are not relying on your network anymore? Of course, I'm not saying you're going to do that, but we want to create a system that is consistent over time. And in order to do that, we need to address the market and target the market in a way that enables us to connect with business owners where they are in terms of decision-making process, and then guide them through a decision. Yes, that's a little bit more effort on our part, but guess what? That's why we help people doing that, because investment firms, private equity, maybe don't have time to do that. We do that stuff for them, and we just bring them the deal when the seller is interested in exiting. So it kind of like smoothens the process for them. The thing is, when you originate off market, and I'm sure you know that better than I do, you're going to find people that are at different stages of their decision-making process. Now, if you step into the market and you try to just squeeze everything you can out of it, the only thing you're going to get is somebody that is interested in selling right now. Now, how many people might be interested in exiting their business the moment you reach out to them? A very limited percentage of any market, to be fair. But how many are going to be interested over a 3-month, 6 months, 12-month horizon? Probably a significant percentage, especially with the silver tsunami happening in the States and in other countries, to be fair. People are progressively considering the idea of an exit, but that idea needs to mature over time. And so as we start originating off-market deals, we build up an infrastructure that, one, understands where the person is in his decision-making process, and then categorizes him in that sub-bucket, if we want to call it this way, so that we can nurture him and guide them through the decision-making process, guide them through the kind of like reasoning that is going to lead them to a sale. As they get guided through the process, they constantly are in touch with us, which gives us two advantages. Well, first of all, we get more deals over time because the process compounds, right? But second, it also prevents you from having these deals stolen from your competition, because if these guys establish their relationship with you early on, they're going to be much more likely to sell to you instead of somebody else, because they say, well, this guy reached out 9 months ago and they kept in touch, and he kept in touch for a long period of time. I feel I can trust him with my business rather than just going with the random stranger that knocks on my door. And so that has two advantages, and it ultimately enables you to have more control over your system. And ultimately, what I think you're gonna like a lot, more choices. Because as we know, in the world of business acquisitions, investment, capital allocation, there's always a better deal, there's always a better opportunity, and we're constantly screening and scanning the market for best deals, better deals, and more opportunities. And so the idea is we look at a ton of deals, we filter through a few of them, these get filtered even more, and then the few that are left at the bottom are the ones that actually get executed. With an off-market pipeline combined with your network, your knowledge and kind of like connectivity in the banking world and the business that you're dealing with, you can really create a very powerful combination because you have that part of on-market deals that works for you and probably delivered all the results that you were seeking so far. But at the same time, you have a process that you fully control and own so that you're not left hanging when things go bad or when things go wrong. And that's what I've seen a lot of people use. And again, to be fair, the system has worked for small search funds and investors, and to the same degree, to some extent, even better for big investment firms, even advisors and investment bankers. But more specifically, I would say what we focus on is private equity, family offices, deals above 5-10 million, these types of companies that you might be targeting, depending on, of course, the industry that you're in. But we have sourced deals in America, Middle East, UK, dozen of different industries. So the system itself doesn't change. What changes is the way you approach it, the way you approach deal sourcing and building up a pipeline that ultimately deliver the outcomes that you need will necessitate a few more steps that you might be thinking about. So it's pointless to try to get a short-term result in November or try to get a quick fix at that point. It's much better to build things earlier so you then have consistency and you don't incur in that issue anymore. By the way, if you want to check out how we can support you with that, we have a wait list going. You can check it out below. Talk with one of our team members. Generally, we only enroll a few new clients every quarter, so we have an active wait list that you're going to need to join. But below you will find a link to speak with one of our representatives and see if and when you can kind of like join and have us support you with DealFlow. But other than that, you can build this by yourself. So there are other videos I recorded on how to structure an off-market pipeline. You can watch those and build the pipeline by yourself, or you can work with someone like us that can get everything done for you. So hope this resonates with you, and we'll talk in the next one.